specifically for the Russell 2000, I think that it may hit an all-time high fairly soon.
Stock rotation has been the headline of the stock market in the second half of this year, and a lot of that rotation has been a move to the Russell 2000. Which small cap stocks and index might be worth rotating to right now? Let's dive in. The Russell 2000 has been up as much as nearly 9% in July, blowing away both the S&P 500 and the NASDAQ, which both saw some losses in July and are also outpacing the Dow Jones, which also saw some very minor gains this month. Our longtime market beat analysts Chris Markoch and Thomas Hughes are here to help us break down what's happening right now in the Russell 2000. Guys, we're going to get to some of these specific stocks that you're watching in just a minute. But first, let's start with a little bit of background here. What started this Russell 2000 spike happening in mid-July?
Well, my take is that there is a lot of opportunity in the Russell 2000. In my opinion, it's the incubator for the next Magnificent Seven. Now, to put this into perspective, let's understand the size of these companies we're talking about. Now, the entire Russell 2000 market cap is worth about $3 trillion. That's about 6% of the entire S&P 500. So 2,000 stocks are equal to 6% the value of 500 stocks. Now, in relationship to the Mag 7, the Mag 7 alone are worth 6 times the R2K. So there is quite a bit of opportunity for growth. Investors are going to want to try they're going to try to pick out the best small cap stocks, the ones that have a potential for growing 6,000% over the next couple of years, because that's where they're going to get these really big gains that we've seen in stocks like Microsoft and Amazon and Google over the last decade or two. They all began as small cap stocks. They just happen to have the right recipe for success. And that's why the R2K has become so popular. There's a lot of opportunities for those kind of success stories to come out of those 2,000 stocks.
Yes, and we're going to be talking more about those success stories right here, but there are several stocks that are falling into this category that do have that potential to run up even more. Again, we're going to get to those specific names in just a minute. But first, let's talk a little bit more about the overall index as a whole. Just how high could we see this climb? I want to talk about that. Thomas, I know we've seen a good amount of ups and downs in small caps over the past 2 weeks even. Do we think it's all onward and upward from here, or what are we going to see?
No, I don't think it's going to be all upward from here. I don't think that we're looking at a one and done event. We have to think that it's been a 2-year rally in the S&P 500 that needs to be unwound. This rally was driven by normalization following the pandemic, the supply chain issues. It's been sustained by consumer strength. It's been boosted by inflation. It's been boosted by AI. The market's highly concentrated. It's definitely going to take some time for that rally to unwind. So what I believe we saw so far in the Russell is a signal that the shift is happening, but I think it's going to take some time to complete. We should expect volatility to lie ahead. Now, specifically for the Russell 2000, I think that it may hit an all-time high fairly soon. However, I think that hitting the all-time high may trigger a dip. Investors that got in early and are making gains now are going to want to take profits and reposition into lower valued companies. But I do believe that a serious, significant rally will continue to unfold. I think that the technical targets are pretty robust. If the R2K does break to a new high and confirm support at that previous resistance level, I think that we could be looking at a gain of 800 points, 50%, a 50% gain from low to the high. We're talking about R2K to 3,200 to 3,600, a gain of about 30 to 50% over the next couple of years.
Now, Chris, Thomas doesn't think this is a one and done event. He thinks that we could see an all-time high soon. But what are you seeing as far as opinions for other analysts who might think otherwise right now?
Well, you've always got your perma bears who they kind of live in that world of fear, uncertainty, and doubt, FUD, and they're always going to say that the sky is falling and that there's investors shouldn't buy into this rally in small caps. And there's just enough volatility that you would say that feeds into that. But I don't think if you're looking to invest in small caps as a long-term play, I don't think you should put that much stock into that. FOMO is not your friend when it comes to small cap stocks. You really have to be in these stocks with conviction. It's not hard to be cautious, because there's been a lot of times where people say this time it's different when it comes to this stock or that stock. But I think you really just have to look at these stocks with the long-term lens, have your conviction, know what is normal for a stock in terms of price movement, so you know what's abnormal for it, and plan from there.
FOMO is not your friend.
Nope.
Great investment advice. I'm noting
Right.
that one for the future, Chris.
Right.
But for those that are betting on the Russell 2000 right now to continue its climb, we do have a list of some of the stocks in the index that are worth getting into during this rotation. We're going to get to that soon. But first, here is a look at a tool that you can use to track all of the small caps in your portfolio and more with MarketBeat. Let's take a look. Want to keep your finger on the pulse of the market? Text the word YouTube to 68285. That's 68285, and get free breaking news alerts from MarketBeat for the stocks that matter most to you. Don't miss out on crucial updates. Stay informed and stay ahead. Now, Thomas, your article on which small cap stocks to rotate right now is getting a lot of feedback on our website. Of course, I'm going to link that down below so our viewers can read that. But walk us through the first small cap stock that you're watching right now. What are you seeing?
Well, the first on my list is Super Microcomputers. This is a microchip stock. They're focused on servers and data centers. They use a lot of NVIDIA chips. So you have to think that demand for NVIDIA is really demand for SMCI, because a company that wants to buy an NVIDIA chip for their data center isn't just going to buy the chip by itself and then go plug it in. They've got to buy the servers and the equipment to make it happen. And that's where SMCI comes in. Right now, the revenue is ramping like NVIDIA's. It accelerated from 100% growth to 200% YOY growth in the last quarter. The forecast is for the YOY growth to slow, but outperformance is still expected. They're going to grow 37% sequentially this coming quarter. Next year, the forecast is for 60% top line growth. I think that could be a little bit shy. NVIDIA's growth is still, I mean, it's just wicked hot. Profits are there. Margins are widening with leverage. It's outperforming on the bottom line. That's a really big driver for the stock price and why this stock is in rally mode. And analysts believe that this is going to be sustained. Not only is there an upgrade cycle in chips coming, but the analysts themselves are looking at an upgrade cycle. They've been kind of lax in their targets in some of these stocks, and especially in super microcomputers. And we should expect to see them continue to lift their sentiment and their price targets as the quarters progress.
Now, with so much growth already this year and analysts pulling back on their excitement for this stock, Chris, are there any concerns for the biggest growth phase for super microcomputer? Are we concerned that this growth is already past?
Well, that's certainly the opinion of some analysts. Thomas is correct. Supermicro seems to have really two camps. There's the one camp that believes we're kind of just at the beginning, or we're in the early stages of this data center build out. However, there's other opinions that say, because of this AI bubble that we're in, it's the build out that we've had of data centers is not going to be sustainable. I noticed that Susquehanna is an analyst firm. They've been bearish on Supermicro for a little while, and they just raised their price target for Supermicro, but it's still 64% lower than the consensus target. So not all the analysts believe in Supermicro the way some do.
Now, Thomas, your next small cap pick here has struggled for more than a year. What is going on with Carvana that made you add this struggling stock to your list to rotate right now?
Well, there are really two things driving my opinion for this stock. One, it returned to growth, and two, the analyst sentiment. So over the last year or so, the company has restructured and repositioned for the times, and it's now well positioned to sustain long-term growth. It's got a digital-first footprint, is seen as a major advantage, compounded by the aging car fleet. So right now, all of our cars, on average, are as old as they've ever been, at record age on cars. That means that demand for new used cars is building. That's going to drive an upgrade cycle in the car market, which Carvana is well positioned to take advantage of. Not to mention the fact that Carvana's digital-first footprint adapts very well to AI, which is going to improve its own efficiency and profit margin, as well as driving customer satisfaction and growth. Now, as far as the analyst sentiment goes, the price target is still lagging, but they've been making some aggressive revisions this year. The consensus target is up 150% in the last year, mostly in the last 6 months. The freshest targets imply 20 to 25% upside and fresh multi-year highs. And again, the chatter among the analysts is that we're in the early stages of an upgrade cycle in the sentiment, which means that we should expect to see not only Carvana's results improve, but analyst sentiment continue to improve, which is a powerful tailwind for the stock price.
Sounds like some powerful upside coming for Carvana. Chris, do you see Carvana making gains for investors quickly, or do you really think it's going to take some time to build up equity for those who choose to rotate to that stock today?
not I'm not as confident as the analysts are. What I'm seeing is a company that revenue is down from its peak, and when the revenue was at its peak, it wasn't profitable, and so it's still not profitable. I agree with Thomas. AI could give this company a boost, especially in margins that might turn it into a path to profitability here. But without seeing that, I'm a little bit skeptical. Plus, I'm not really sure if the consumer is healthy enough right now, even though we are in a cycle where if interest rates come down a little bit, it should spur demand for used cars. But right now, I'm not as high on Carvana as Thomas is.
All right, so you're not all in on Carvana. Let's hear what you are interested in, though. Let's get to your pick. What small cap stock are you watching right now?
I'm looking at Joby Aviation. This is a company in the EVtol, which is electric vertical takeoff and landing vehicles. It's in that space. It's a growing sector and it's an emerging sector. I know we've talked about Joby a little bit on this channel from time to time. This is the kind of company and industry that would really benefit from a rate cut and perhaps a more favorable regulatory environment, which might be coming in 2025. All the numbers are falling into place. The company should start commercial flights in 2025. That doesn't mean it's going to be generating a lot of significant revenue, but it's going to have product in the market. It's building cash on its balance sheet. It had around 920 million as of the end of the first quarter. Profitability is going to take some time, but this is a sector to watch. And to me, this is the kind of small cap that you really kind of want to get into, because this is the type of stock that has the potential to be the multi-bagger in the future.
Thomas, what are your thoughts on this sector for small cap stocks?
I like Joby. I know that our director producer doesn't like us to agree on things, but I really like Joby. It's a good company. It's a good stock. I like
Yeah.
the EVtol market. One of Joby's most recent news releases, and I don't remember the specific miles that the vehicle flew, but they flew a hydrogen fuel cell EVtol electric vehicle like 350 miles and still
Yes.
had 15 or 20% charge left. So that opens up a whole new market. Joby is supposed to be air taxis for inner city use. This sets them up for regional traffic, say from like Raleigh to Atlanta, with absolutely no emissions, just water. And it's proven. They did it already. It's just a matter of time. Like Chris said, they're on track to start commercial operations next year. They're targeting a couple of major cities in America, I believe Dubai and in India also. So I really expect to see some big things from Joby over the next year.
Sounds like it's a proven stock, one that we're going to continue to watch here. But Thomas, I know you have just one more pick that you talked about in your article. This one's particularly interesting to me as someone who's bought cosmetics recently. Why do you think this budget-friendly beauty company e.l.f. is worth investing in right now? Before you answer this, leave a comment down below, guys, if you want to discuss some makeup products. No, I'm just kidding. This is a stock market channel. Thomas, tell us what you have to say about e.l.f.
So why buy e.l.f. now? Because the stock price is down 20% from the recent highs and new highs are likely. This company is taking share from established legacy cosmetic retailers. This recent sell-off is partially due to cautious guidance. They're expecting revenue growth to slow, but still strong at 20%, the company also tends to outperform. So the guidance is really being viewed as cautious. There is also a catalyst in lower interest rates. Lower interest rates should help increase consumer spending power. As I was saying before, I don't think that the sell-off in the broad market and the signal in the R2K is a one and done thing. I think that the big rally may not start until early next year, because it will take some time for the FOMC to make that first cut and for those cuts to impact the consumer. But what I'm saying is that this tailwind is in place that should help spur better than expected results and even accelerated results compared to the guidance. Analyst sentiment is also very positive. Analysts are raising their targets and their sentiment ratings despite the weak guidance. The price target is up more than 100% in the last 12 months. The consensus implies a 20% gain that aligns with the new all-time high, and most of the fresh targets put the stock at a new all-time high. So again, it's just a matter of time. I think that the recipe is there. I wanted to say the factors are in place to drive this stock to a new high.
All right, Chris, I know that you have 2 daughters. Have they had any e.l.f. products taking over some counter space that maybe used to be occupied by other brands?
You know what? I really would not be able to answer that.
Pay more attention, Chris.
I will have to pay more attention. There's
All
a
right, well,
lot of cosmetic and skincare products taking over the countertop in their bathroom.
well, we have named just a few of these stocks here, and I'm sure there's even more small cap stocks that could bring some big returns for traders and investors. But when it comes to investing in small caps, Thomas, what are some of the risks that investors should be keeping in mind?
Well, as much opportunity as there is in the R2K, there's an equal amount of risk. Um, all these companies have lots of competition. They could be easily disrupted. They're reliant on capital. If they can't get it, they could fail. Even if they're successful, the way that this market tends to work, Russell 2K stocks are very volatile. So we should expect to see a lot of whipsaws and whiplashes, regardless of the ones who are successful.
Chris, what do you see as the most important thing to consider when you're investing in small caps?
Yeah, I think when it comes to small caps, you have to be patient. And I guess more importantly than patient is you really have to have conviction on the stocks that you're buying, because the time frame can be a lot longer than you think. It's not that the due diligence really is any different. Some of the companies don't have a lot of fundamentals for you to look at, but you still know what to look at. It's just the fact that the timelines are a lot longer. And so I think you really just have to have a lot of conviction. But with that conviction, you also have to know when it's time to just get out too. If you've been in the stock for quite a while and it's just not moving towards any sort of profitability or revenue path, then it's time to get rid of that too.
Well, great insights today, guys. Thank you, everyone, for joining us for this deep dive into the Russell 2000 index today. And some of this rotation is still underway this summer. We're going to stay on top of that right here at Market Beat. So, of course, subscribe and stay tuned for more. But as always, happy investing.